Hello there guys, what is going on? Welcome to Puretrading and another strategy video this week. This week we will be covering the falling knife strategy. There's a nice little joke I want to tell you about this strategy first before we get started. There was these traders in a steakhouse. They were all traders. Look, if you are not a trader, you're not going to catch this joke. Just a warning there. There's these few traders and they are in a steakhouse and they're all eating steaks with their steak knives, and they're talking about the market and they're talking about their big wins, and you know how the traders are they're boasting about the wins and stuff. So this one guy, this one trader, as they're standing around in the circle, he takes his steak knife and he throws the steak knife up, and the steak knife starts spinning around and starts coming down. So just imagine prices are coming down. The steak knife is coming down. So what this trader does is he puts his foot out, and if he doesn't move his foot, the steak knife is gonna fall right through it, and he's gonna hurt himself or lose his foot. And what happens is the steak knife falls and it goes right through his foot. And, he gets hurt, and the traders standing around him ask, look, why didn't you just move your foot away from the falling knife? And the trader sits there and he scratches his head. He says, I thought it was going back up again. That's the moral of the story, is not to trade against prices that are, falling drastically or moving one way. Just don't stand against that move. Okay, so let me show you the strategy. So the falling knife strategy, we use a ranging market. Firstly, what we need to identify is a nice range, but prior to the range we need to also see that there is a trend coming down, so or up. It just depends. But if the trend is coming down, as we can see here, we are looking for long moves. So we are going to be looking for a break of this range, but we're not going to trade the breakout or anything. What we're going to do is we're going to look for the ideal place, the ideal spot for where we're going to have a possible reversal of this short-term trend going up and to rejoin this massive long-term trend. So if that sounds interesting to you, then watch this video. Also, leave a thumbs up, comment, and subscribe if you haven't already. So where is the market going to turn here once it breaks out of the range? That is the question. A lot of us are looking at previous support and resistance areas. So here it's support, it turns back into resistance at this area, and we use Fibonacci as well. And with this strategy, we're going to use Fibonacci to help us and to guide us to choose the optimum area where prices might turn back and join this trend, the long-term trend. The trend here is just a short-term trend, because what we are looking at is this long-term trend. So in this trade idea, we're looking for shorts. So what we do is we find our range and we look for clear swing highs and swing lows. So what you do with the Fibonacci tool here is you draw it from the high to the low. It's just because we are looking for shorts, because the trend is going down, we're also drawing our Fibonacci tool from the high to the low, like parallel to the trend line. So you find your highs and your swing lows, and you look for your Fibonacci extensions and your Fibonacci retracements. So what is Fibonacci retracements, just for all the new guys out there? So retracement is just imagine there's a line coming down here, and this is it's 100%. It's let's say it's a 100 pip move down. So this price moving up here, where is this price going to rejoin this move down? So that is a retracement. So in this case here, where we start drawing from, that's the 100% line. You draw down and then prices goes up to the 50% retracement. So that means that prices has retraced 50% of this line here. So this is about, if this was 100 pips move down, then prices is retraced 50%, which is 50 pips up. And then you get another retracement here, a 78.6 retracement and a 161.8. So there's your 78% retracement and then 100% retracement here. So once your retracements are at 100%, it means that your prices has retraced its track, retracing all the way back up to 100% of this line here. So it's retraced 100 pips back up if this is 100 pips down. And then your retracement ends right there. Whenever prices are breaking your 100%, which is the line where you started drawing the retracement down, then you are heading in for the extension part of our Fibonacci tool. So you have, I'm using for this strategy, the falling knife strategy, I'm using the 127.2 Fibonacci extension and the 161.8 Fibonacci extension. So let's go back to the chart quickly. So where are prices going to turn? So what we said was we take our swing high to our swing low and you get your Fibonacci numbers. These are all the retracements all the way back up to 100%. And anything further than that is called an extension. So your range is now, we're waiting on our range to break. And let's first go to the 4 hourly, I forgot to mention. So here on our 4 hourly, this is the same swing high, swing low. What we are trying to do is find the same. Let's just go back here. We are trying to find the 127.2 and the 161.8. We want to line up. We want the 127.2 to line up with a higher time frame support and resistance, or we want the 161.8 to line up with a higher time frame resistance. So this is an hourly chart. So if you go over to the 4 hourly chart now, and you have that same swing high to swing low, and you have your Fibonacci numbers here, that's your 127.2. We can see here that this is a nice area of support there. It's broken through support, it's come back up, come back and acted as resistance, and then again broken through, acts as support again, and then sometimes resistance, support, and then again support, and then it breaks through. You see, so this is an important area. So this 127.2 on the 4 hourly lines up nicely with what we saw on the 1 hourly chart. And then this 161.8 has the same philosophy behind it. We have support, resistance, and then breaks through, back support, resistance. It just, you can see that this area is of importance on the higher time frame. So whatever we find here on our lower time frame, which is the hourly chart in this case, we want to see that same support as confluence on the higher time frame. I hope that makes sense. And then here on our daily, the even higher time frame, we can see this is my swing high and my swing low, and my extensions are 127.2. So these are the same extensions that we drew from the 4 hourly and on the hourly chart. As we can see here, it's just makes sense that these are good areas. Also, a thing of note here, we can see that prices are just coming down. So after the range we are looking for, after the range here, we are looking for reselling again. Yeah, we're just following this long-term trend, the fundamental trend. So back onto the hourly chart now. This is my swing high. This here is my swing low. So where am I going to find the best, the highest probability where prices are going to retest this area and then come back down? So we are going to use the 127.2 or the 161.8 Fibonacci extension. So what we do is our sell limit orders are put here as prices are moving up into the 127.2 area. So before prices are even getting here, we are putting our sell limit orders right here, and our stop losses are above, about a few pips above here, 1 or 2 pips above the 161.8. And then our targets, we can use various methods. We can use the 100% retracement, which is the 100% of this line to there, remember, and then that's the 100%. Or we could use the price. We can use support there as areas where we could possibly take some profit off the table, or we can manage our trade. There's various ways. The reason for this video is just to help you find out the area where we could really look for high probability turns in the market alongside this massive fundamental trend here. So after prices has been ranging here all the time, it's broken out of the range and it's finding the 127.2 in this case. And also if you go back to the 4-hourly chart here, we can then see that that 127.2 area is of significance. So it's not just the Fibonacci, it's Fibonacci plus a good support area or resistance area on the higher time frame. So in this case, prices goes up to the 127.2 and could go up to the 161.8. But let's see, we had our limit order in there, and prices are now reacting off that 127. Remember, we do have our orders in, so we are triggered in. We have our targets at the 100% retracement there. Prices are now nicely moving down. There's a nice surge down, trying to get to our target. Now, anywhere, at any point, you can manage the trades here. Trade management is it's a lesson on its own. So this video is all about just trying to find that high probability turns. So in this case, it hits our target and then it goes all the way back up for another chance to get into the trade. So remember that this is a counter trend trade, because now what I mean by counter trend is that this small trend here, we are going to look for the swings, the possible swings there. So we're only looking for like 60 odd pips on an hourly chart. So also bear in mind that we are trading alongside the huge fundamental trend. So let me just show you that a bit better here quickly. Let me get out this pen and do this better for you. Because this part is extremely important to understand and to try and grasp this part. So what I mean by against the trend here, it's this trend that we're talking about here. Yeah. So the fundamental trend here is short, so we're getting our higher highs or our lower highs and lower lows there. Then we are looking for the accumulation phase here. And then once it starts to break out here, we are looking at the highs there and the swings there. And then where are we going to start looking to rejoin the longer term trend? Yeah. So if I make this even clearer for you by showing you how this part of the trend moves up. So you have the short-term trend here. So once you get to the 127.2 or the 161.8, then you are looking for, hoping for a nice swing. Yeah, or it gets up there and you're looking for a nice swing. So that is what I mean by, well, that's the difference between the fundamental trend here and then the short-term trend here, because we assume that we are just going to follow the big trend in the market. Right, so then we took some profit there, the 60 pip profit, and what happened next for us here? Next, we had another sell order in the market here at the 161.8, because with this strategy we're using the two Fibonacci extensions here, 127.2 and the 161.8. So we're putting our sell limit order here, we're putting our stops in this case at the 200% retracement, a little bit above there, and then we are just putting our limit orders in, and there we go, our sell limit has been hit and our prices are going down. So again, where do you take your targets? You might take it at these swings here. You can look at various methods. The management, as I said before, is a video all on its own, but just look at this result on this one. We had our sell order here, remember, at the 161.8, and then way up here we had our stops above there, and then prices hits our first target perhaps, and then depending on how you managed your trade, look at how nicely this one just moved all the way down. I think that went to about 250 pips on that one. Let's look at another example on these trades quickly. So in this scenario here, we can see that prices are going long. Our big fundamental moves here are going long, and we're finding ourselves in a nice little range, and that's what we are looking for. So there's our range. We're looking for our swing lows to highs. Remember, we are putting our Fibonacci from the low to the high because our fundamental trend is going long. So we are looking for long trends here, or a continuation of this long trend. Then again, we put our Fibonacci and 127.2 and our 161.8. That's how it looks on the hourly chart, the extension. You see, that's how it looks on the 4-hourly chart now. And we can see that the 127.2 meets some resistance here, resistance there, it turns to support here. So it's a significant area on the chart, not just the 127.2 without any confluence. We must have the confluence. That's the secret of this whole strategy. There is a high probability chance that the trades will work out if you do have both the Fibonacci and the confluence support and resistance on the higher time frames, like in this case the 4-hourly. Here we can see the 161.8 also acts here as a resistance, and then again support here, and then again support here, and then support there, breaks through, support, and then let's see what happens here. So remember, again, on our hourly chart we are putting in our orders here. So if you put your orders in here, or if you put your orders in here, in this case your buy limit orders, then you can see this trade worked out very nicely. You had about, I think, in this case about a 300 pip move up. So any questions on this, leave the comments below. This is a nice little strategy. I used it in the past and I use it a lot now to pinpoint entries where I use a different entry strategy, but the areas on the chart, the profit points, I call all these areas, like this is an area on the chart here. It's where I would think is a high, or I believe this is a high probability where it's going to turn alongside this massive fundamental move that's going up. So if you found any value there, please subscribe to the channel. There's a lot more to come. I'm trying to push out like at least one strategy video a week, and the strategies can all be used and amalgamated so that you can turn something like this into your own. Don't forget, guys, that the most important thing, no matter what video you're watching, no matter where the information is coming from, the most important thing is to trade safely and prosper. Bye-bye.